Good morning. Thank you for joining today's daily webinar. Today, we're going to answer your questions. We're also going to discuss how to maximize pre-tax solo 401k contributions for a sole proprietor / 1099 NEC independent contractor. Please like this video as it helps to get this information out to other solopreneurs like you. Again, go ahead and ask your questions here on the live chat. We'll be live again today at 1 p.m. Pacific time. Today's webinar is for educational purposes. We are not going to be providing tax or investment advice on today's daily webinar. Okay, let me share my slides here and we will get started. Okay, so if you are a sole proprietorship, which means you receive a 1099 NEC because you're a contractor. Your business may also be an LLC tax as a sole proprietorship. Then you would qualify for a solo 401k plan, as the solo 401k plan is for owner-only businesses with no full-time W-2 employees. The solo 401k plan is utilized by the self-employed to supercharge their retirement account savings. For example, with the IRA, the maximum contribution limit is $7,000, whereas with the solo 401k plan, it's $70,000 for tax year 2025, and it's $69,000 for tax year 2024. So you can see how you can really maximize solo 401k contributions when your business is taxed as a sole proprietorship because you are self-employed, and therefore you would qualify to open a solo 401k plan. Let's talk about how you would maximize contributions to the solo 401k plan when your self-employed business is a sole proprietorship or an LLC tax as a sole proprietorship. In other words, you might be a contractor where you receive a 1099 NEC, or your LLC tax as a sole proprietorship receives that 1099 NEC. The contributions to the solo 401k plan for a self-employed business tax as a sole proprietorship is going to be based on your net profit reported on that Schedule C, which is going to be line 31 of that Schedule C. That's titled the net profit, net loss. So as long as you have a positive figure of a net profit in box 31 of that Schedule C, that's the figure. That's going to be the starting figure for determining your solo 401k annual contribution amount. Once you know the line 31 of Schedule C, you're going to plug that line 31 figure to the solo 401k contribution calculator. The solo 401k contribution calculator will further reduce that line 31 figure by 1/2 of self-employment income tax. Once that 1/2 of self-employment income tax is reduced from that line 31 of Schedule C, that figure is then used to calculate employee and employer contributions. So let's give an example. Let's say Joe is self-employed. He receives a 1099 NEC because he's a contractor. Joe then prepares his Schedule C, which can easily be done by filling out the form, or if Joe uses TurboTax to prepare his taxes, he can prepare that Schedule C through TurboTax, and then he's going to know what line 31 is of that Schedule C. He then plugs that Schedule C onto our calculator, or he plugs in that Schedule C line 31 figure on our solo 401k contribution calculator. And then the calculator, let's say that he plugs that in, let's say it's $110,000 of line 31. The calculator, let's say, reduces that 1/2 of self-employment income tax. Let's say the figure is now $100,000. So his contributions to the solo 401k plan are going to be based on $100,000 after 1/2 of self-employment income tax is deducted. And let's further assume that he's making a contribution for tax year 2024. So he could do a 20% employer profit sharing contribution of $100,000. So 20% of $100,000 is $20,000. Then he can do a $23,000 employee solo 401k contribution, which is the maximum employee solo 401k contribution amount for tax year 2024. So you add that 23,000 plus that 20,000, he's going to be able to contribute a total of 43,000 to the solo 401k plan for tax year 2024, consisting of $23,000 in employee contributions and 20,000 in employer contributions. Now keep in mind that that's just an example of one contribution calculation type. Another calculation would be, for instance, if Joe solely wants to make voluntary after-tax solo 401k contributions for tax year 2024. Well, with the $100,000 of net self-employment income after you subtract 1/2 of self-employment income tax, he could choose to contribute the entire $69,000 as a voluntary after-tax solo 401k contribution, therefore maximizing his contributions for tax year 2024, assuming he's under age 50. So $69,000 would get contributed to the voluntary after-tax solo 401k bucket, and then Joe can convert that to the Roth solo 401k or the Roth IRA. Keep in mind, it's not too late to open a solo 401k plan for tax year 2024 here in 2025. You have until April 15 to open that solo 401k plan here in 2025 so that you can make contributions for tax year 2024, specifically if you want to be able to make employee contributions. If you wait to open the plan here in 2025 after April 15 of 2025, and you want to make contributions for 2024, you're still going to be able to make employer contributions as well as voluntary after-tax contributions by October 15 of this year for 2024. You just wouldn't be able to make employee contributions for 2024, as those have to be done by April 15 of this year if you're just now opening the plan in 2025. If you already have a solo 401k plan that you open by December 31st of 2024 or prior years, then you're going to be able to make all contribution types by April 15 or by October 15 if you file for an extension. So that's the way you maximize contributions for a sole proprietorship / 1099 AUC where you're a contractor. Again, if you're just now joining today's daily webinar, please like this video as it helps to get this information out to other solopreneurs like you. Okay, let's take a look at some questions here. We have a question here. After reviewing the video from yesterday numerous times, let's see if I have this formula and procedure correct for Roth after-tax contributions. So with numerous small businesses, let's say combined Schedule C profits for partner one is 50,000 as per Schedule SE line 2. Let's say the partner self-employment tax Schedule SC line 12 is 7,600. Well, number one, it's not line 12. If you follow a Schedule C, it's line 31. You need to look at line 31 of the Schedule C. If your business is a sole proprietorship or an LLC tax as a sole proprietorship, as we just covered here on today's webinar, it's going to be line 31 of your Schedule C. That's the line number that you need to look at in order to determine contributions to the solo 401k plan. So if you report line 31 Schedule C, so again, not line 2, but line 31 of your Schedule C. So if line 31 is $7,600, see if I can do a calculation here. Go to our calculator. So if we go to our calculator, and let's say you're under age 50, and you report $7,600 of line 31 Schedule C, because you're a sole proprietorship or your business is taxed as a sole proprietorship, then here's the calculation here for tax year 2024. You have to subtract 1/2 of self-employment income tax. So here it is. The calculator subtracts 1/2 of self-employment income tax, which leaves $7,063.08 as your net self-employment income. Therefore, you can contribute that entire $7,063 as an employee solo 401k contribution, or you can put $1,412 of that as an employer profit sharing contribution, and then the difference up to $7,063.06 as an employee pre-tax contribution, or you can choose to contribute the entire $7,063.08 as a voluntary after-tax solo 401k contribution and then convert it to the Roth solo 401k plan. All right, let's go back to our other slides here. See what other questions we have. I just signed up last night to open the solo 401k. I believe the first year I can still contribute both the employer and employee portion, but for 2025, I better contribute by December 31st. So yes, you can still contribute for tax year 2024 based on your net self-employment income for tax year 2024. So even though you're not opening the plan until here in 2025, the solo 401k regulations allow you to contribute to the solo 401k plan in 2025 for 2024. Let me look at some information here. So if your business is a sole proprietor, you're going to be able to contribute the employee contributions by April 15 of this year for 2024. And then if you file for a tax return extension, so Form 1040, you're going to be able to make employer profit sharing contributions by April 15 as well, or you can wait till October 15 of this year to make that 2024 employer contribution. You can also make voluntary after-tax solo 401k contributions for 2024 by April 15 or by October 15 of this year for 2024 if you file for an extension. The 2025 solo 401k contributions, those can be made here in 2025, or you can wait and make those in 2026 by April 15 of 2026, or if you file for an extension by October 15 of 2026. Okay. Yeah, a follow-up question. If I have multiple Schedule Cs, do I look at the combined number of the Schedule Cs? That's exactly right. You need to look at the line 31 of each Schedule C, and you need to add all those line 31 Schedule C amounts together, and then plug that total Schedule C amount, line 31 Schedule C amount, on the solo 401k contribution calculator. So for example, let's say you have two Schedule Cs. Each Schedule C will have a line 31. Let's say the first Schedule C has 20,000 and the second one has 30,000. That's going to be a total of 50,000 combined Schedule C's line 31. You would plug in that $50,000 line 31 total figures to the solo 401k contribution calculator, and the calculator will do the calculation for you. All right. Yeah, if you're over age 65, then for tax year 2024, you qualify for a catch-up contribution. Well, catch-up contributions for those who are age 50 or older in 2024, you can do a $7,000, $500 catch-up contribution. So that's on top of that overall limit of $69,000. Keep in mind, you can't contribute more than you make, though. So in order to contribute that $69,000 plus that $7,500 catch-up for 2024, you're going to need to make enough net self-employment income from all your Schedule Cs. Now for 2025, there's a new catch-up called a super catch-up, but it's only available for tax year 2025. It's not available for 2024. It's only available for 2025 and future years. So for 2025 contribution figures, the total overall limit is $70,000. But if you're age 60, 61, 62, or 63, you can do a super catch-up of $11,250. If you're age 64 or older, you cannot do the super catch-up. You can only do the catch-up amount of $7,500. So let me share this screen here, the link to this printout here, so you can take a look at that. Okay, there, just share that with you here. Okay. At what point do you contribute to the Roth after you max out your deductible contributions? Well, not necessarily. That's the great thing about the solo 401k plan, is that you can choose the contributions you want to make. The key is not to contribute more than you make and to not go over that annual overall limit. So you might choose to make some employee Roth solo 401k contributions, some employer contributions, some employee contributions, and some voluntary after-tax contributions. Just don't go over the overall limit. Or you might choose to solely make voluntary after-tax contributions, which is $69,000 for 2024, and then convert that over to the Roth Solo 401k or the Roth IRA. So you can actually choose the amounts that you want to contribute within the limits. Okay, let's see what other questions we have. Again, we'll be back again here today at 1 p.m. Pacific time for more questions. It looks like we've got everybody's questions answered here thus far. So again, thank you for joining today's daily webinar. Please like this video, as it will help to get this information out to other solopreneurs like you. Until later today, have a great rest of the day.